Let me start by going over some examples of things that you can invest in. Again, these are just examples. I am not telling you what to invest in. More specifically, I want to focus on 3 different types of dividend funds. And yes, I'm going to focus on ETFs, not individual companies, because when you invest in an individual company, you take on all the risk. Could the company go up and pay much higher dividends? Absolutely. But if it goes bankrupt, you lose all your investments. So for the purposes of this video, I'm going to focus in on funds and 3 different categories of funds. I'm going to focus on United States companies. I'm going to focus on REITs, real estate investment trusts, and then I'm going to also discuss international funds as well. And a few examples of United States dividend paying funds that you can consider investing in are NOBL, SCHD, which I am personally invested in, that's what the asterisk means, and SPYD. NOBL is an ETF that invests in dividend aristocrats in the S&P 500. What does that mean? These are companies in the S&P 500, the 500 largest companies in the stock market that pay out a dividend, and these are companies that are dividend aristocrats, meaning they have paid out and increased their dividend every year for at least the last 25 years. So it's a very specific group of companies, and at the time we're recording this video, they're paying out a dividend of around 2% a year. SCHD, this is a broad United States dividend paying fund that's investing in high dividend paying companies across the United States. And then SPYD, this is an ETF that invests in the dividend paying companies in the S&P 500. Now, this is where you can start your research. Again, I'm not telling you what to invest in. I'm giving you ideas of how to start your research. But the whole idea here is there something specific that you want to invest in? And there's probably a fund for that. Now, you just got to find what type of dividends that you want to invest in. Now, for those of you that are investors and you want to stay up to date on what's happening in the markets, when it's happening, that way you can stay on top of all of this. Market Briefs is a free newsletter that I created where every day my team is working to break down what's happening in things like the stock market, the housing market, the crypto market, the global economy, and our own economy into a fun, witty, and easy to read newsletter. You can read it in less than 5 minutes every morning, and it's completely free. So if you have not joined Market Briefs yet, I got the link for you to join down in the description below. Then we have REITs, real estate investment trusts. These are companies that invest in real estate, and so now you're getting exposure to those companies that are investing in real estate. And I have kind of a broad list of different types of REITs here. REZ, XLRE, and CTRE. REZ is a REIT that invests in residential real estate, the single-family homes and multifamily apartment complexes. At the time we recorded this video, this is paying out about 2.4% a year in dividends. Then we have XLRE. This is a REIT that's investing in the ancillary real estate businesses like property developers and property management companies. And at the time we recorded this video, it is paying out 3.3%. And then we have CTRE. This is a REIT that specializes in the healthcare industry. This is like nursing facilities or senior living centers. This is a REIT that invests in those types of properties, and this is paying out a yield of 3.8% at the time we were recording this video. And then last but not least, we have international dividend paying funds. What these are companies that are not in the United States, and the advantage here is you could see upside not just in the company, but also the country. But the downside is it might not be as established of a country or a company as the United States. And so that means you could also see more downside risk as well. So higher returns, higher potential risk. And so a couple examples that we have here are RWX and VYMI. I'm personally invested in VYMI. This is a fund created by Vanguard that's investing in high dividend paying companies outside of the United States. And at the time when we're recording this video, this is paying out a 4.3% yield. And then you have RWX. This is a fund created by Spider, which is also investing in dividend paying companies outside of the United States. And at the time when we're recording this video, it is paying out a yield of 3.5%. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.